This is Sovrun, where we break down the metrics that actually move markets. Today, we're diving into one of the most misunderstood forces in options trading, the volatility variable. I'm Rob, founder of Sovrun and a systematic investor. Every strategy, every metric, every video on this channel is built on real data and a disciplined framework. At Sovrun, we don't trade on gut feelings. We automate risk management, execution, and exits, so the numbers make the decisions, not emotions. Ever notice how your Uber ride costs more during a thunderstorm, even though you're going the exact same distance? That's basically how options work with something called Vega. When markets get nervous, option prices spike instantly. Vega measures how much an option's price changes when the market's fear or excitement shifts by just 1%. Think of it as the uncertainty tax. When everyone's panicking about earnings or Fed announcements, your options get more expensive, even if the stock hasn't budged. The formula is simple. Vega equals the change in option price divided by the change in implied volatility. Let's say you have an option with a Vega of 0.12 and implied volatility jumps 3%. 0.12 times 3 equals 36 cents. Your option just got 36 cents more expensive from volatility alone. Here's the key. Longer-term options have much higher Vega. A 30-day option might have a Vega of 0.12, but a 6-month option could be 0.3 or higher. That means the same volatility spike hits longer options 3 times harder. NVIDIA earnings in May 2024 was a perfect example. Before the announcement, implied volatility was 85%. After the blowout report, it crushed to 45% overnight. Traders who bought calls lost $6 per contract just from the volatility drop, even though the stock soared. Here's the brutal truth. You can be right about direction and still lose money. If you don't understand Vega, you're buying expensive insurance when everyone's already scared. The key takeaway? Buy Vega when markets are sleepy. Sell it when they're panicked. This same concept shows up everywhere. Hurricane insurance spikes as storms approach. Airline prices jump during holiday uncertainty. If you want to think about markets the way a systematic investor does, follow at The Systematic Investor on YouTube, TikTok, and Instagram, and at Sovrun Investor on X. Learn more at sovrun.io. This is Sovrun, and this is how we invest.